Now let's talk about an impending global crisis, the cocoa market boom. Cocoa, as you may know, is the key ingredient in chocolate. It is mostly grown in two countries, Ivory Coast and Ghana, both in West Africa, but the crop there is failing, which is why global cocoa prices are rising. Cocoa production in West Africa has been hit by multiple disasters, disease and volatile weather being the major ones. Now, these are natural factors with no short-term solutions. But another force is also causing cocoa prices to spike. An unnatural force which is always ready to add fuel to any fire. Wall Street. Hedge funds are getting in on the cocoa price surge. What does that mean? Investment bankers may be making your chocolates unaffordable. Here's our report.
Cocoa prices broke a record recently, a record set 46 years ago. In the United States, their prices surged higher than what they were in the 1970s. Cocoa was trading at more than double the level it was from just a year ago, at over $6,000 a ton. The age of affordable chocolates might be ending. Soon, your favorite treat might become a luxury, and all the chocoholics out there might be in for crippling withdrawal symptoms. But how did it come to this? Why are cocoa prices skyrocketing? There are various reasons, starting with the deadly virus called the cocoa swollen shoot virus disease. This pathogen infects cocoa trees using insects to spread from one to another. It causes leaves to go red, then deforms them, and it also causes cocoa shoots and roots to swell, hence the name. The disease slowly reduces a cocoa tree's crop yield and finally kills the plant. This disease has been ravaging West Africa for years, especially Ghana, which is the world's second largest cocoa producer after its neighbor Ivory Coast. Together, the countries produce about 60% of the world's cocoa, and swollen shoot virus is decimating trees in both countries. This means lower cocoa production. Lower supplies lead to higher prices, and so you have sky-high prices in global commodity exchanges. Volatile weather exacerbated by climate change has also reduced crop output, leading to a poor harvest last season. Cocoa prices had been rising for a while, but the poor harvest caused a surge. It also led to something else. Cocoa prices caught the eye of Wall Street bankers. Hedge funds that traditionally stay away were lured by potential profits in cocoa. They began investing in the commodity, buying up contracts and fueling the surge in prices. Hedge fund activity helped pump up cocoa prices in hopes of a good payout. And they've started cashing out now, making a tidy profit in the process. But while Wall Street is reaping the rewards, what does it mean for the rest of us? Well, chocolate will get more expensive. You may have noticed it already when you tried to buy chocolates for Valentine's Day. If you did not, you'll probably feel the pinch by the end of the year, because it is the price of cocoa futures that spiked. Futures, as the name suggests, sets the future price that will get cashed in by the cocoa harvest later this year. You can expect chocolates to be expensive this Christmas. So while Wall Street struck brown gold, consumers will have to foot the bill eventually. But what about cocoa farmers struggling in Ghana and the Ivory Coast? Will the price surge mean they benefit? Well, yes and no. Both Ghana and the Ivory Coast pay fixed rates to cocoa farmers. The price is set for the whole year. This is so the farmers are protected from market volatility. So this means they won't immediately benefit from the high prices, but they could make more money next season if their governments increase their cut. For now, the lives of the farmers won't change much. It's only the Wall Street tycoons laughing all the way to the bank.